Hi there. I thought I'd bring you up to date on what's going on in the Toronto residential resale market for the month of November. It looks like 2024 is closing on a positive note. Last year, high mortgage interest rates had a big impact on the market, with monthly sales decelerating. In November 2023, 4,194 properties sold, compared to 5,875 properties selling, which is over a 40% increase from last year. Year to date, a welcome 64,277 properties have been reported sold across the Greater Toronto Area. By year end, the total sales is expected to reach approximately 68,500, surpassing the 65,877 properties which were sold in 2023. However, this figure still remains well below the 90,000 properties that we saw sold in the decade prior to COVID-19. Sales increased across all housing types, including condominiums. Detached properties sales rose 44%, semi-detached properties grew by 25%, and even condominium apartment sales increased more than 36% region-wide. Despite this growth in sales volume, condominium apartments were the only segment to see a decline in the average sale price year over year. In the City of Toronto, the average condominium sale price was $713,364, with the central districts accounting for more than 65% of total sales. Average condominium sales prices are down almost 12% from the height of the pandemic in November 2021. On December 11th, the Bank of Canada lowered its overnight benchmark rate by 50 basis points to 3.25%. Additionally, there were two federal mortgage reforms which took place on December 15th. The first one extends amortization eligibility to allow first-time homebuyers who are purchasing a new home to extend their amortization period for their mortgage from 25 years to 30 years. The federal government also increased the cap for insured mortgages from $1 million to $1.5 million, aligning with the current market costs in Toronto. These changes, alongside marginally lower interest rates, are expected to stimulate the resale market, which has faced challenges over the past 18 months. Ground level properties have strengthened as the year progresses. In November, the average sale price for detached properties in the City of Toronto reached nearly $1.7 million, a 5.9% increase compared to last year, while semi-detached properties reached an average sale price of $1.25 million, up 2.8% from last year. Inventory levels remain higher than historical norms, but have been gradually declining. In September, there were 25,612 properties listed for sale in the Toronto region, and by November 2024, that number dropped to 21,818, likely reflecting sellers' anticipation of improved market conditions in early 2025. The pace of sales slowed in November compared to last year. Properties in the Toronto region took an average of 31 days to sell, compared to 25 days in 2023. However, all properties sold for 99% of their asking price on average, with specific property types varying. Detached properties in Toronto sold on average in 25 days, albeit at 98% of their asking price due to their high price points. In central Toronto, the average detached sales price reached $2,598,026. Semi-detached homes continue to be the most sought-after housing type. In Toronto, they sold in just 21 days at 103% of their asking price. Eastern districts like Riverdale, Leslieville, and the Beaches saw semi-detached properties sell even faster at 19 days on market and for an average of 107% of asking price. Inventory for semi-detached homes remains low, only 1,110 listings across the city region. Semi-detached homes offer a desirable balance of affordability and value, making them an attractive option for many buyers. As we look ahead, these trends suggest a cautiously optimistic outlook for the City of Toronto's real estate market in 2025, supported by improved affordability measures and steady demand for well-priced housing types. Now let's throw in the mix the new Trump presidency, which will kick off on January 20th, 2025. This could, of course, introduce a whole new mix of risks and opportunity for the Canadian and Toronto housing markets. Economic uncertainty, interest rate fluctuations, and shifts in migration and foreign investment patterns will likely be the most significant factors to monitor. Canadian policymakers would need to remain agile to mitigate potential risks and capitalize on opportunities to create housing market stability and affordability. Thanks so much, and if you have any questions, please reach out.